Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too.
But that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2.
For traders looking to get funded, this week only, FX2 is having a 45% off sale. To get everything FX2 has to offer, use promo code A1Trading15. Again, this huge 45% discount is available this week only. So use promo code A1Trading15 at checkout. Links and promo code can be found in the description below. Now, onto the A1 Trading Show.
All right, good morning, guys. Welcome back to another live stream, and arguably one of the most important events of the month. We have the CPI number coming out pretty soon. CPI, of course, inflation statistics yesterday were pretty mixed. We saw the producer price index come out hotter than expected. So you might say, Nick, why on earth is the dollar down if inflation was hot, right? Well, here was why. The producer price index yesterday came in hot, but what was a little confusing was that, yes, it came in hot for the latest data, but they revised the previous number down. Okay, so they kind of did a little bit of this. You had hot inflation for the latest, but they revised the previous one to make it look cool. So what you were left with yesterday was some mixed inflation data, some good news, some bad news. So the market kind of reset and it said, oh, initially it popped because inflation looked hot, but then they came back because it was like, oh, well, you know what, revisions are, it kind of is a non-event. So that's what happened yesterday with the producer price index. I made a tweet about that this morning because I saw so many people, and this is a pet peeve for fundamentalists. 101, if you want to make a fundamentalist really annoyed, if you're somebody who tracks, economic data and you focus on it like we do on these shows, the quickest way to annoy someone like that is to complain that the market is manipulated and fake and, none of it's real and that it doesn't make sense. It actually made really good sense yesterday because, again, the dollar's in a downtrend. So if inflation data didn't save the day for dollar bulls yesterday, it's all on CPI today. If you get a hot print out of the CPI here this morning, then yes, we might see a pop on the dollar. But if you don't see that, you've got just a laundry list of not good news for the dollar bulls. So today is really pedal to the metal for the bulls. It is the last line in the sand, in my opinion, for dollar bullishness. If you are a dollar bull going into this event, you are looking for inflation to come in hotter than expected. The CPI is everything here, okay? Now, it's not just everything for the dollar index. If you're trading currencies, that's important, but it's also very important for the story for gold. It's also important for the NASDAQ. It's important for the S&P 500. And guys, this is just a monumental event because what we've seen recently, I've done this a few times, but let me set the scene for you as we approach the CPI data. Now, there's about 750 of you guys here. If you guys could do me a quick favor and hit the thumbs up button or like the stream wherever you're watching. I believe we're live on Twitter and on YouTube right now. Shout out to everybody who's watching. Thank you for being here. Let's jump into some analysis as we prep. We're 10 minutes away from the biggest number, arguably, of the month. This one is really, really important. Now, jobs data was huge, but this is really where it all comes down to. So I'm going to walk you through some data really quick. I want to paint a picture for the U.S. economy. And give you my perspective of why, at the end of it, we're going to reach the conclusion of why I am personally not telling you to do this. This is my own opinion, as always with my channel. I am long gold, and I feel pretty convicted about gold to the upside. I'm floating a couple winning positions right now. I want to talk about that, but I can't do that unless I give you the full picture. So bear with me here. If you're a regular, then you probably can say all of this line by line with me. GDP numbers, what did they do? They came in lighter than expected. This is the gross domestic product of a country. This is like the simplest way of kind of outlining the economic growth of an economy. And what do we see here? Well, forecasts, your yellow dot on the Edge Finder is your friend here. It's going to show you the forecast for what GDP we're expected to be. We've plotted that on the charts for you. Okay, boom. Then what did we get? We got 1.6. So we expected 2.5. We got 1.6. Okay, GDP, we can say confidently there that GDP figures were a little bit disappointing. Okay, so GDP figures disappointing. Let's keep going. You're going to see a trend here pretty quick. The US, we've selected the US for our PMI data. This is the Purchasing Managers Index. It helps us to spot what purchasing managers in the manufacturing or services sector, respectively, are feeling like going forward. This is, in my opinion, one of my favorite indicators because it is a forward-looking economic data point. Okay, it's asking influential people, purchasing managers, are you going to be doing more hiring, more purchasing, etc. in the weeks, months to come? Very important. Okay, so this came in lighter than expected. So again, PMI data for manufacturing came in light. And top it up with services, a large component of the US economy, also came in light. Okay, PMI data, give it an X, because again, cooling in PMI, cooling in GDP, retail sales, we get that data here today as well. So I would go ahead and say this doesn't count yet because this is old data. We get the new data today. It's a big day in the market. So stick around. We'll be covering all of it. Don't go anywhere. Smash the thumbs up button on the stream. Let's get into all of the data today. NFP. Okay, ready? Jobs data came in light. It missed substantially, the first big miss in a while. So jobs data starting to cool. And, you're hopefully seeing the trend here. The economy, unemployment claims jumped. Job openings are on the decline. Okay. Unemployment rate rising. Do you see the trend? Wage growth shrinking. Inflation data is what is up next. That is why today, if you are somebody who is a dollar bull, again, we're losing all of the dollar bullish cases, in my opinion. They're not holding up. The US economy is starting to slow down. So I'm not a dollar bear outright unless today we get a cool CPI print. If we get a cool CPI print today, then to me, there's just nothing going for the dollar right now that I can meaningfully hold on to and be confident about it. Okay. So all of this stuff to say, what does all of this point to? The economic data coming in really light, bullish gold. Okay. Now, you could do all that manually if you have the Edge Finder, but why do all of that? We looked through those charts together, and I think that was intuitive for you guys. But why do that manually? That's why we have the top setups algorithm. You can see all of the data that we just did together manually. The software automatically is calculating scores based on the data that we have. Okay. The algorithm is smart enough to say, okay, if GDP comes in light, make that a positive factor for the price of gold. And so right now we are getting some very strong readings on gold bullishness. Now, I'm not saying that CPI can't come in, and really change the picture for gold. I'm saying right now and the last few days, we've been in the long side of gold. Things are going really well. I've got 2 trades and I'm trailed into profit on both of them. Nope, on one of them. I have a very small risk on trade number 2 and a very nice profit trailed on trade number 1. So today, with inflation figures, this is the final one to fall. If you get the DXY could really tumble if you get cooling economic data. Cooling economic data plus cooling inflation. The only really kind of potential savior to the dollar here today in the short term, in my opinion, is a really red hot CPI print. Are we going to get that? I don't know. I'm not a forecaster of the economy. There are, I made this point yesterday, macroeconomic supercomputers trying to predict the CPI, and yet still they get it wrong too. So my point is, we're not trying to forecast what CPI is going to be. I'm not going to tell you buy this or sell this or I'm doing this, right? Because I don't know what's going to happen with CPI. And I say this every single month for both NFP, CPI, all the big events. What we do is we trade the aftermath. We factor it in. Again, our algorithm here, we're not trading based on gut feelings or, emotions. We are trading based on what the system is computing based on all of these very important figures that we talk about over and over on the show. So the question is today, is inflation going to help the story for things like gold, for the Euro USD, or is it going to hurt it? Is the S&P 500 going to struggle because we see a tick up in inflation? We're waiting to see what that happens. We're waiting for it to factor into the algorithm. And last month, this led to some of the best trades that I've had on gold in a while. A couple months ago, we also had gold bullish readings. So I'm really focused right now personally on gold. It is something that I've got 2 winning positions on. Let's paint another picture. What about if you're wrong, Nick? What if you look like an idiot in an hour? And gold just drops like a rock. Again, my stop loss is trailed into profit. So today, if the market completely sells off on gold, I'll still make money. I wish I was always in this situation. Sometimes I get it dead wrong, but right now I've been very right on gold. I'm just looking to see if we can get some follow through. So the question is, do we follow through to the upside on gold? Do we head back to retest those all-time highs? And what's going to get us there? Here's the thing. We have cooling economic data. So for the gold story, I like it irregardless of whether or not the inflation comes in hot or cool. Because if it's hot inflation plus cooling economic data, stagflation, I like gold. What about if it's cold, Nick? Well, then they're going to rate cut. And I like that for gold. So I like the story for gold overall. And again, I'm not saying it can't go down dramatically because markets can always do exactly what people don't think they're going to do. But I'm telling you that is where I am positioned. That is my opinion. That's been my position for the last few weeks. So we will see how that plays out. Line of support on the dollar. Let's take a look. Here's the US dollar. So currently, dollar kind of trying to hold here. Again, the issue is today it's all about the CPI. We're coming in, by the way, in just under 2 minutes. You're trying to hold this level of support, but it seems to be slipping away fast. The last line of defense is CPI. Again, I don't claim to know what CPI is going to be, but it is dramatically going to set the tone for the dollar going forward. In my opinion, that's why today's show is so important. We got 1,400 people watching between YouTube and Twitter. Let me just ask you guys to do me a big favor. Wherever you are watching, if you could like the stream, heart the stream if you're on Twitter, repost it on Twitter or X, whatever they call it these days. It really does help just to support what we're doing here. If this free value is helping, please do that for me. I appreciate it. Okay, so what we're going to do now is we're going to switch over to the all markets view so that I can take a look at this stuff from a big picture. Again, everybody has their markets they want to watch. I know that there's currency traders in here. There's index traders who are watching the indices. People are watching gold. So I've got it all on the screen for us, guys. Floating up to 1,500 viewers. Hello, everybody. Again, don't go anywhere after the spike. That's usually what happens. We can always see it in the retention line. Everybody, all the spike junkies come running in just to watch the big event, and then they all leave right after. But again, we're going to do analysis to follow the CPI to really see how this could impact markets going forward. And more importantly, just on a personal note, how it could impact the scoring system on the Edge Finder to keep me bullish or bearish on certain assets. We're coming really close here. Let's go ahead and roll our breaking news coming into CPI momentarily. All right. I'm going to pull up the economic data, see what we've got here. Again, coming in very, very soon. We should be seeing about 5 seconds to go here. Let's see how CPI impacts the markets today. All right. And CPI should be coming out here. Stock market jumping here initially. Euro up, pound up, dollar down, gold up. Okay, let's see that would suggest off of first guesses that was a inline or soft inflation figure. Consumer price index month over month came in 0.3%. Very nice, lighter than expected. 3.4% year over year came in line with expectations. So again, let's see if there was any revisions here. So previous 0.4. Previous 3.5, so it doesn't seem like any revisions on that front. So we got a in line with expectations. This is down from the previous year over year. Inflation is at 3.4% according to the CPI. Month over month again came down slightly. Let's see what else we've got. The core came in with within line as well. So we'll take that. And retail sales, we also have retail sales. Don't forget, retail sales came in slightly lighter than expected. Consumer price, we get a lot of stuff on FX Street, man. We could really spend some time here. Retail sales also revised slightly lower in the previous month. So, okay, very interesting. We're getting retail sales slightly lighter than anticipated. And look at the reaction here today, guys. Those are some moves. S&P 500, I believe, crossing an all-time high here as we speak. Gold jumping up 0.8% on the day. And there goes the dollar. Again, let me reiterate what I was pointing out with the dollar index. I don't know the future, right? But at this point, the Edge Finder has pretty much everything going against the dollar in its calculation. We have now softening inflation. We have economic data that is cooling. And now, you know, if from a price action standpoint, if we close like this today, that is spelling not so good news for the dollar index. Gold is jumping on this. Again, nice little break here to the upside. Here's the live P&L. Let's check on gold. So we're up $7,400 on this trade so far. Stops are trailed into profit. What I'd love to see personally to go ahead and trail my stop loss further in would be to see a nice close above this level. If we can get a close above this previous high, then absolutely I will be looking to trail my stop and lock a little bit more in on the gold move. Gold's, you know, in my humble opinion, gold was going to go up either ways today, even if it may not have gone up, you know, per se as much as it's gone now. But my perspective was, even if it dropped, I thought there would be dip buyers that would step in. Again, opinions only. I'm not telling you what you should do with your financial situation. I'm just sharing my opinions as always. Gold, again, up 0.72% on the day. Silver up 1.5%. You got the NASDAQ up 0.7%, S&P up 0.6. And again, this is an all-time, very close to an all-time intraday high for the S&P 500. We are just at the 5280 mark now. And again, markets just ripping higher on the celebration that, again, we have strong earnings, but also inflation that seems to be coming in line. You know, to me, it's hard to find a short-term reason to be a seller in this market. It's just got all of the things going for it in the meantime. Doesn't mean something won't come along to be more bearish. But for me, again, I've got a couple positions on the S&P. I'm long gold. I've got some technology ETFs, XLK. Let's see how my technology play is doing. That's looking okay today. Very nice. Take a look at some currencies. Euro USD pushing higher here today. Beautiful. Again, cooling economic data plus cooling inflation out of the US is making the dollar lose a little bit of its steam. And Bitcoin, not going great for me. I shorted Bitcoin, so this one's not looking as hot for me. What probably is looking good for me, though, is TLT and TAN, two of my positions. I'm going to pull this up here so I can show you guys where I'm at. So, of course, market's not open just yet, but TAN, this is a solar company or solar ETF. We're up nicely on that one. We'll see how that one wants to go. Again, a very interest rate sensitive part of the market is both TLT and TAN. So solar panels, bonds, these things will appreciate. By the way, also semiconductors. You know, now that I look at my account, there's a lot of interest rate sensitive stuff here. Technology, TLT, TAN. But again, we've been seeing the formations for that to potentially take place. Economic data cooling. PPI yesterday was a mixed bag. But then you take a look at, again, you take a look at, sorry, I totally lost my train of thought. Cooling inflation plus cooling economic data, dollar bearish, and dollar bearishness is going to lend a hand, I suppose, to some of the more interest rate sensitive areas. Let me draw your attention for a second. The 10-year yield is down, right? So, I mean, this is a break of that upward trend. This was the bear case. Okay, let me be very clear, myself included. I thought, hey, the US economy is just not going anywhere. That inflation is sticking around. And I have to admit that I was wrong. I started seeing some stuff that changed my mind. Again, what really changed my mind was systems. So here's let me tell you something that I struggle with personally when it comes to trading. And I think a lot of people might feel the same way about this. Sometimes my want to be bullish or bearish on something clouds my judgment a little bit. what I love about having the Edgefinder's top setups, and I apologize if this feels like a sales pitch, but I'm genuinely serious about this. What I love about having a systematic approach that helps me to binary, ones and zeros, and I guess some twos in here too. It calculates, right? This is not binary. Let me take that back. I went to CS computer science, so I can't say binary if there's other than zero and ones. My point is this. The Edgefinder computes, it calculates bullish and bearish setups based on a number of different factors. And so, we've got all these different things. I can't go against, I don't go against my system. And if I do, it's very rare and it's on very small size. I don't go against my system. And my system told me much earlier than my intuition did, don't buy the dollar, don't go against yields falling, and don't go against stocks. So it saved me a ton of money using my systematic approach. Okay, so we've done a lot of analysis using the Edgefinder here. I just want to announce something here while we are on live stream. Today only, we're going to be doing just a short-term sale. We're doing a flash sale event for the CPI event. If you want the CPI sale on the Edgefinder, you guys ready for it? If you're hanging out with me live, this applies to you, but it is a very short-term discount, so take advantage of it. We're going to do 45%. We're going to bring it back just for now, and simply because we want people to use our tools. If you are looking to take advantage of this 45% off sale, here's how you can do it. We're going to drop a link in the chat right now to send a direct message to someone on our support staff. A1 Trading is a software company out of Atlanta, Georgia. We spend all day long and sometimes nights too, building tools for traders. Most nights, actually. We constantly are working to improve and to build software tools that help traders out. Again, economic data, seasonality. These are things that you can't just compute all in your head all at once. Software makes it so much easier to have a systematic approach and to really look at the data that I think in this modern day, you need to have. You need to be able to look at, jobs data in depth. You need to look at what the trends are telling you. You need to be able to look at what PMI data and GDP numbers. Having this at your fingertips and easily accessible is imperative in this, modern day. So let me just make my point. Again, sales pitch here and now. If you guys are interested in getting a copy of the Edgefinder for a massive discount, you get 45% off by clicking the link right here. So yes, every pitch is about the Edgefinder, bad sounding marketing. Well, hey, I use this every single day and we get our slack for selling something. But, let me tell you right now, most people who sell something are not showing you live accounts, right? We're showing you real trades, real money on the line. I use this every single day. Who better to vouch for a product with their own hard-earned money than the people designing it? So again, if you are interested in using the systems, we have 1,400, 1,500 people watching us here. If you would like to know my system, my approach to the financial markets, how I'm, years of collective study of this every single day for hours and hours a day, the Edgefinder is our collective kind of knowledge base on this stuff. If you would like to pick up a copy, again, for 45% off, click the link. We're going to drop the link one more time here if you don't mind, Chandler, for us. Click this link. Take advantage of the discount. It is today only. CPI flash sale. Grab our tools, grab our software, and take advantage, okay? Again, that is a short term. What do you want them to do? I mean, yeah. So I'm going to always vouch for the Edgefinder. I believe in the product. We've spent way too much time, energy, money. And again, it is the collective knowledge base of for me, my trading career, but also Frank, who's also helped design it. And we've also had several other notable, like, for example, some of you guys may know Dan Emerson. He's another very prominent fundamentalist on Twitter. And I really love his work. He's now an advocate for and a partnership within the Edgefinder. He's had a tremendous effect on helping us to improve the tool. So we're trying to combine the best group of fundamentalists, myself, Frank, Dan. We want more and more people of that caliber to help contribute to making this, the Bloomberg terminal that's more affordable and also, approachable to the average trader. Let me if you guys have ever looked at the Bloomberg terminal, it's like incredibly expensive, like 15 grand a year, something insane. I don't know exactly the figures, but let me point this out. Our tool, with today's discount, I think it's like under $800 for a one-time fee. Again, that will not be available forever. So take advantage, click the link, take advantage of the sale. It is usually $1,400 and the price is going up to $1,500 pretty soon. So please understand, we're spending a lot of money on the development side. So our tool is expensive overall, but you are getting the highest quality product that I've seen in the FX and futures space. Okay. So take advantage. All right. So S&P 500 here has pushed past the highs, but now giving back a little bit of this. So let's go back through this number for a moment. How is this all forming up? Okay. So you had a CPI number month over month came in a little bit light. The revisions to the previous number, there weren't any, right? So 0.4 came in. Consensus for this one was 0.4. It came in 0.3 month over month. Year over year, what are we looking at? Previous, we had 3.5. Now we have 3.4. What this does, I think, is at least it takes out the, are we going to get a fourth month in a row of higher than anticipated inflation? That was everything today. So what's exciting here is that we, for the bulls, for people who are, hopeful for rate cuts, for cooling inflation to come in line, for that to play out, this is the first step in the right direction. And not overall, because the overall direction has been up clearly on the S&P 500 because, economic data before the CPI also kind of suggested, hey, things are cooling down, but we needed that confirmation from CPI that you're not getting cool inflation, hot inflation and cooling economic data. So today you get that confirmation, and I think the bulls will probably celebrate that in the short term. Now, what gets us to explode past these highs? The next big event is 7 days away. It's NVIDIA's earnings. So if you're watching indices, that's kind of our next catalyst. But in the meantime, I think we probably have room to continue higher. Unless you see some big rejection today, like if you see, long top wick, then I would be a little cautious. And I'm not a buyer up at these levels personally. But again, I think that in the short term, the market can celebrate and can rally. You know what I feel a little bit more confident about is gold, right? I'm liking the story for gold better because you're seeing some economic cool down, which is good for gold, incites a little bit of uncertainty about the financial markets going forward. But at the same time, continuing to go higher. Took me a while to figure out how to use the Edge Finder, but had it for a month and it is clutch. I only trade gold. Awesome. Thanks, Mike. Appreciate that. Why is the market celebrating a year-over-year inflation of 3.4%? In my opinion, nothing has changed. Rate cuts from table till September. The reason is because there was doubts, right? The reason you have to think about, a lot of people today were thinking, oh my gosh, inflation is not going anywhere. It's going to, continue to trend up. And we have data. Let's use it. Hold on. Let me pull up the CPI. So if I'm looking at CPI, this was our setup today. Now, the latest data hasn't yet updated. It'll be in here pretty soon. We had a couple months here. The blue, by the way, is US. US inflation was trending up. So the fear today was that you were going to see, all those other things that we talked about earlier for like 5-10 minutes, cooling and inflation continuing to go up. So today we didn't get that. Today we got evidence that, okay, inflation, all that stuff is cooling, but so is inflation. Even if it's modest, even if it's mild, last time around we had 3.5%. You can see here, I've hovered over it. 3.5% was the previous read, as we mentioned earlier. We're going to come in today at 3.4%. That's a piece of progress, right? Now the market can say, okay, yes, the economy is cooling, but so is inflation. We're okay with that. What the market absolutely would not have been okay with was economic data coming in light, and at the same time, inflation sticky and problematic, because then people are going to get scared that the Fed would need to rate hike. So it doesn't seem like rate hikes are the next move. We've heard that from Jerome Powell. Even yesterday, he reiterated again that the next move is not a hike, at least in terms of what they currently expect. Can that change? Sure. Can, the Fed get it wrong? Absolutely. We saw in 2020, they got it terribly wrong when they thought inflation was going to be transitory and ended up being a multi-year campaign now to get it back under control. Does that make sense? Hopefully it does. Do me a favor. If the show has been helpful to you so far, we're not going anywhere. We got more stuff to talk about. Things are just heating up. But I just want to ask you, take a moment here really quick to hit the thumbs up button on the stream if you have not already. And we're going to just take a moment's break here, thank one of our sponsors, and we'll come right back. I want to talk about gold and what I'm doing next. So don't go anywhere. Sit tight. We'll be right back.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, and we're taking a look at gold here. I just got a text from Frank. You guys know Frank. If you're a regular, Frank said that he doesn't believe the CPI number. I don't know if he's being, it's a text, so you never know through texts. Things can get miscommunicated, but I don't know if he's kidding. But he sends me a text this morning, says, I don't believe the CPI number. So maybe he has just gone, Frank is over in Europe right now. He's away from the office because he's taking a little bit of a vacation with his family. He just sends me that text. And, I don't know if he's being joking or not, but it is kind of a surprising number. Things seem to have been trending up on inflation, but now in line with economic data cooling, we do see inflation coming down. Forward looking, the question is this oil price decline actually going to continue to help the inflation story? That's the big question. That being said, with yields dropping here today and economic data coming in light, I very much like where I'm at with gold. Again, I'm not going to make this any more complex than it needs. I've been drawing this over and over. So if you've seen me say this a lot, then I apologize. Let's do some simple analysis. Okay, we're looking at gold. We're doing the fundamentals. The economy out of the U.S. seems to be, it's not crashing. Let me reiterate, it's not this, okay? The economy is cooling, right? So cooling economy plus, at the same time, inflation. What do we have? We have, I'm not going to say it's really cooling fast either. In fact, that would actually be super bullish for gold because then you're talking about like deflation and terrified fears and all that stuff. What I'm going to say is that we also have very modest cooling in inflation as of late. But this is only as of late. We still have overall still high inflation. Please remember, guys, that this is one print. CPI is important today, don't get me wrong, but it doesn't confirm that we've just entered back into an inflation decline environment. Yes, on a 1 month basis, we've come down a little bit, but remember, that's just 1 month. We have to look at things on a kind of a rolling month basis. I would say you probably need 2 more months of cooling inflation data to really get the market convinced that inflation's coming back down and then we can see rate cuts. If you're somebody who wants to see rate cuts in September or November or December, what you need to see right now is inflation not just do it one time here, but continue and persist lower over the coming months. You don't want to see a one-off and then a reversal. So my perspective is this. This is kind of the current tradable setup. Inflation's cooling, which I mentioned earlier. That means rate cuts are going to be kind of exciting to the market. So people are going to say, okay, nice. Rate cuts are probably on the way, and they're going to cheer that. At the same time, so this is good for gold. Rate cuts are good for gold. And so that's why I like the story either ways. Now, you might have said, but Nick, you said stagflation if the inflation was hot. Yes. But I mentioned also at the beginning of the stream, I was bullish on gold regardless of what happened with the inflation data today. I think that, enough of the economic cool down stuff has already shown up to get me excited about gold. Now, the one thing that I will say is that, we've lost a little bit of the geopolitics for gold. So if you're, somebody who is saying gold is, the risk premium to gold is people pay a little bit of extra money for gold because maybe there's some conflict in the Middle East that they're afraid of, and that could scare the markets. And so maybe gold is a good place to hide out. So that's the full picture. But I think that trade is something that is currently not really front of mind. But at the same time, it's also something that's very inevitably hard to predict. What I have in front of me that I can make a decision on is we have cooling economic data. Again, I'm a broken record, I'm aware. Cooling economic data and inflation data that is suggesting that rate cuts could still be a possibility, perhaps at the end of this year or maybe early 2025. So I like the gold story. So again, I actually added ahead of CPI. Call me crazy, but I doubled my position size on gold on this this pullback here. I'm sorry. Was that right? No, I added it over here. So I added a second trade. I took my first trade over here. I added a little bit more on the second trade, and we've made a nice move on GLD. Why am I trading GLD? Well, quick plug. If you guys aren't trading with WeBull, it is the brokerage that I use as a US trader. So my US friends, if you are looking to trade options and ETFs and stocks and indices and gold and everything like that, and you're looking for a good broker, I would suggest that you check out WeBull. It's regulated in the United States. It's what I use. Boom, there's the link. Reason I mention this too is I trade ETFs, which that's why, I do my analysis on the spot price of gold because the chart is much cleaner, but then I just execute my positions on GLD, which is an ETF that tracks the performance of gold. So it just moves with it. So again, gold here to me has the all clear, in my opinion, to make a move back up to the previous highs. 2,400 seems like not only a checkpoint, but just a pause before we do break new highs. Now, at the beginning of this year, my target on gold, I think, was like 2280. So I got it really not wrong per se, because I was bullish going into the year, but it kept going a lot further than I thought. So I think a lot of times people think, gold has to correct, it has to come down. Really, I've traded gold for a long time. When it makes its big moves, it is very unidirectional and it's relentless. So I think that perhaps if you see fears about recession creep in, if the economies of the world continue to cool, right? If they start to accelerate to the downside, I love the story for gold. So this is why right now I'm, positioned heavily in gold longs. S&P 500, I do have positions on this. I am long on indices. I also have XLK, which I mentioned earlier. So I don't hate the idea of staying long indices right now. I just need to be aware, and I'm very much fixated on the acceleration of that economic decline. Is that going to accelerate, or is it going to just kind of steady out? I want to see the economy. If I'm going to stay long stocks, I want to see the economy slow very, very modestly, but I don't really want to see a ton of decline, because then that means the earning side to stocks will start to struggle. If GDP continues to do another thing like it did, before when I mentioned this, right? GDP, we had a miss on GDP. If you see several misses on GDP, I'm going to get really, really uninterested in staying long stocks, simply because company earnings could take a hit. The market is priced very richly right now. So to me, the stakes are high to stay long stocks. So that's my opinion on the matter. When I take a look at yields, again, yields are down here very nicely today. This is great for my TLT trade. I am long TLT. I'll show you my position on TLT. Let's go TLT. I sold covered calls against my position. In fact, actually, wow, we are in profit now on TLT. So TLT has been a loser for me. You guys who watch my shows on a regular basis, TLT has been a losing position for me. We are now in profit, believe it or not. Very good. Bitcoin, another trade for me, not going as well today. I shorted Bitcoin. Let's see where we're at with this one. So we are now floating, $158 loss on this one. So Bitcoin is my loser on the day, but everything else seems to be doing just fine. TLT, gold, again, TAN, another one. Let's take a look at TAN just for fun. So this is Invesco Solar ETF, and this is something I have been bullish on. Very nice gains here. And again, with interest rates expected to potentially be cut here this year, if that's going to become the new expectation, well, not the new one, but if it does kind of continue to be the base case, TAN and TLT are going to appreciate nicely. So again, the cool thing about fundamentals, I just want to reiterate, I've said this a lot recently. The coolest thing to me about trading with a fundamental analysis perspective is I'm not married to one chart. If I'm not seeing setups on gold, I can go look at ETFs that I like. If I don't see any ETFs that I like, I can go look at the dollar index, and I can, place a trade on TLT, or I can trade the euro against the dollar. The cool thing about being fundamentalist, kind of as my base, is I can trade a wide basket of markets. I'm not married to one. I have, a whole list of things that I'll potentially trade. Dre, what's up, man? Nick, did you sell GameStop? No, I never did. GameStop, thank you very much, by the way, for the $2 donation. I very much appreciate that. You guys don't have to donate to the stream. Dre, I've told you 20,000 times, don't donate. Just come join the VIP group. If you want to, come join us, it would be awesome to have you in there. But if you are watching GameStop this morning, a lot of people are probably in some pain, down 15.5%. And, that's an aggressive sell here this morning. I actually thought when we were walking out of the office yesterday, I said to James, who's one of our producers, you guys probably know him or see him on the show periodically. James and I were pointing out that, back in the day in 2021, we saw this theme that kept happening over and over with GameStop, which was in the morning, it would gap up and then sell off in the day. Except for this day, every day was actually a red bodied candle. So markets would gap up, and then people who were claiming diamond hands perhaps were just selling into that volume during the day. So selling intraday, selling intraday, selling intraday. I'm watching just out of curiosity. I don't have any money on this, and I'm not really truly very interested in trading it. I mentioned as a fun experiment that I might short some shares. I still might, but for me, it would be a tiny, for fun position, and mostly a gamble completely, admittedly. I don't know what GameStop's going to do in the short term, because, the crowd could get hyped up on another picture that gets posted. I can't predict that, right? But in the long term, what I think is a fair prediction, in my opinion, is that GameStop will probably be a $15 stock again someday. I don't think that, this is the new start to a revival in GameStop. We saw how that ended up last time when they got injected with investment from the retail crowd. It got squandered over time. And I don't know if you guys saw this, but AMC, remember AMC, the other meme stock? I have not pulled up an article on this, and I don't want to speak out of line, but I believe, please fact check me, that AMC's board, or their executive, whoever, their management, actually took this stock jump, this price in this jump in stock price, to actually sell shares at a very, very improved evaluation. So AMC themselves, the actual company, and the people who direct it, I believe, sold shares into this rally, because they're like, oh yeah, we know our company's not worth this. We know our company is not worth $12, $13 a share. It's just the crowd is pumping it up. And I don't think I'm saying anything, even that controversial to the crowd themselves. The crowd themselves understands that these stocks are meme stocks for a reason. They're companies that are business models that are really suffering and struggling, but they're just trying to play the short squeeze. I hate to be the naysayer, but this is a different time than 2021. People aren't sitting around with stimulus checks. Sports aren't just, completely turned off like they were in 2020, right? Remember, in 2020, when everybody went crazy on meme stocks, everybody was sitting at home. They had stimulus checks. Sports had been turned off because of the pandemic. They had nothing to gamble on, and they were bored at home, and they had money. Is that the same scenario we have nowadays? No, people went back to work. Inflation has really hurt the consumer. People are feeling the effects of inflation. Sports are on. It's a news cycle. People are looking at new things every day. In my opinion, be very careful if you're watching GameStop or AMC or any of these things. Andrew Tate said we should buy GameStop. Andrew Tate used to sell a Forex course too. Okay. So just be careful. If you find him entertaining, that's totally up to you. But in terms of me and my money, I am not trusting, a random influencer on the internet to tell me what the financial market's going to do next. And I don't think you should trust anybody blindly. Not me, not anyone, right? You should highly do your own research. Yeah. Okay. So again, I think that you just have to be very careful with that. The dollar index continues to trade lower here today. What I'd be curious for on a price action perspective is, now that this is broken to the downside, how does this daily chart close? And are we now just going to start kind of continuing to trend lower on the dollar index? In my opinion, the dollar index actually looks like a bearish setup if we get pullbacks. So I might actually, I already have bearish setups on the dollar. TLT, being long TLT, is sort of a proxy. If you are long TLT, you're kind of bearish dollar, because again, TLT bonds typically will go up when yields and the dollar drop, right? So yeah. Can you explain in simple terms what CPI, PPI, interest rates, inflation do to gold? Yes, I use software to explain it, again, because there's no need to do this off the top of your head. Inflation, so CPI, right? Let's do CPI here today. I don't know if the data's come in just yet, but if it's not, we'll just draw it. Okay, so CPI comes in light. Let's do blue just to stay in line here. So let's say, CPI is going to come in like this. The data has not just yet updated. So if inflation is cooling, and if, let's say, we start to see a trend down in inflation again, what that's going to say is the Fed is going to say, okay, great. We don't need to hike rates anymore. They've already said that. We don't need to hike rates anymore. But now we may actually seriously be able to start looking at cutting interest rates. Cutting interest rates means that borrowing costs go down. If borrowing costs go down, banks and the Fed and all of them, they produce more dollars as, people want to go borrow money. They go, borrow it to buy a house. They go borrow money to start a business. Businesses borrow money to grow. The point is, more money floods into the system because borrowing costs are more attainable. Mortgage rates are super high. That's prohibiting. That's an artificial way that the Fed stops people from borrowing money and spending it, right? To stop inflation, the Fed has made borrowing costs higher. That's essentially what they've done. Okay, with that out of the way, if they do the opposite and they make dollars more accessible to everybody, then more dollars get printed, more dollars are in the system. And again, the dollar suddenly becomes less valuable. The dollar goes down in value. A weaker dollar means you need more dollars to go buy an ounce of gold or to buy a lot of things for that matter, right? So a lot of times the Fed has said, we're keeping rates steady because we don't want to cut too soon, because they understand that that is a stimulus event that could reignite inflation. So they want to see inflation starting to trend lower before they allow the money printers to come back on and for the borrowing cost to come down. Does that make sense? If that breakdown was helpful to you, do me a quick favor. Just smash the thumbs up button or the heart button wherever you are watching this live stream. There's 1,225 people here. Thank you very much for spending some time of your morning or afternoon with me. Hope this has been helpful to you. I'm still going. Don't go anywhere. Don't worry. But I just wanted to explain that and just ask you to, again, take a moment to support the show if it's been helpful to you. Yes, I love you. I love you too, Aman. Appreciate it. Okay, so let's keep going with that thought, though. So if borrowing costs are more attainable, and inflation, again, being the catalyst that helps us get there, if that starts to cool, what happens? Well, stocks probably cheer because they say, oh, borrowing costs, the consumer can go borrow money and go spend it. Great. Stock earnings could go up. As long as the economy doesn't, what we don't want to see is the economy causing the inflation slip. If people aren't out there spending money because they're really hurting, and now people are starting to lose their jobs, and that becomes an accelerating trend. If the economy slowdown accelerates, that's what you don't want to see. Because then now you probably don't want to be in stocks, because then company earnings are going to look worse. Hopefully that makes sense. But again, all that to say, I know that this stuff is a lot. And if you feel like, man, I need to listen to this stuff just to keep up to date with it every single day, I'm telling you, get a copy of our product. It will help you tremendously with understanding fundamentals better. By the way, gold just updated. Inflation data is in on the Edgefinder, and Edgefinder just got a boost even hotter. We just went from a 12 score to a 14 score on gold. So a 14 score implies that almost everything is pointing towards gold bullishness. So again, I remain long on gold simply because the system has kind of pointed towards that with everything, but then I went and found setups on the chart that I liked. So again, gold to me is my play right now. I remain long. I entered once here, a second time here, called that out inside of our Discord room. And again, we'll hold on to that trade. I'm looking to trail stops from here today. And I'm going to go ahead and lock in a profit on that. Oil continues to look, I actually really like the sell side for oil, to be honest. I'm going to take a look at US oil just really quick. So US oil, if we get pullbacks in oil, I may actually be a seller. I don't like the chart right now. Well, I do like the chart. We got lower highs, lower lows, but I'd like a pullback. If we can get a pullback on oil, guys, I may be looking to sell this one on a rip. If I take that trade again, I'll share it inside of our Discord room. We do have a free Discord channel. We can drop the link to that if you guys aren't already in our Discord, or we'll drop our free Telegram as well if you guys want to keep up with what we're looking at. And also, let me just reiterate also, today we're doing a CPI event only, 45% off discount on the Edgefinder. If you guys would like to take advantage of this flash sale event, it is only today. What we're going to drop here is one more link. I apologize for all the link dropping. One more link here. If you guys would like to get access to the Edgefinder for that 45% off discount, it is a massive discount that we're doing today for CPI. Take advantage. Click this link that's just been dropped in the chat. And by doing so, you can speak directly to someone on my staff who will be able to get you hooked up with a copy for a huge mega discount. Again, it's almost half off. So don't miss that. If you've been thinking about getting the product, today is your day. It's yours. Just imagine the excitement of getting a product that we've spent 2 years on today for nearly half off. Again, when I talk passionately about this product, it is because it is something that is, it's like almost an emotional thing for me in terms of like how much, time I've spent in this platform here trying to make it the best that it possibly can be. It's a tool that I love. It's a tool that I use every single day. And I want more people around the world to share in, the Edgefinder. I also would love, if you're an Edgefinder user already, please do me a favor. Do me a big favor. If you're a big show fan, if you're thinking about, how we can improve the Edgefinder together as a community, please click this button. If you have a copy of the Edgefinder, leave us some feedback. We'd greatly appreciate that. We read every single message that comes in from our users. We value what you guys have to say tremendously. And sometimes a fresh take from somebody is all that we need to get ideas flowing to improve the tool further each and every day. The NASDAQ is actually getting a bullish reading on the Edgefinder today. That is interesting. I imagine, big component to that is the COT data was bullish. So was the trend. So let's have a look at NASDAQ. Is the NASDAQ actually just a buy here, even though it's crossing all-time highs? It's a tough call for me to make. But again, the overall setups here look pretty positive, at least in the short term, right? Something will come out of the woodworks. It always does, to scare the market. The market will eventually sell off. But again, right now, conditions look favorable to the upside. I'd like to see a pullback. I'd like to see a corrective move. If that happens, I may be a buyer of the NASDAQ. But, currently, like I said, my favorite setup is still going to remain gold. I'm looking for potential sells on oil. I'm going to stay long on my TLT position if I can. I did sell a covered call, so that might actually get called away from me. The strike price on that covered call is 92, I believe. So, yeah. Bitcoin pushing higher here. Here's one of my losing trades today. Bitcoin is up on the day, about 3.4%. But this is a bit of a swing trade for me. So I have some room, and it's a small trade. It's a small size. So if the market rips higher on Bitcoin, then awesome. But what I've been seeing here has been lower highs, lower lows. So you could make an argument there's a higher high, but What I'd say is in response to that from a price action perspective, it's only really a higher low if we break through these levels, right? Because if it's a higher low, you can have consolidation before a new low makes or forms, right? A higher high would kind of solidly say, oh, now we might be trending up. In that case, I'll stop out. Silver. Yeah, let's do silver. Silver for Benny. We'll do silver. Silver chart looks so good. Look at this. Beautiful break back to the highs and now actually challenging this 29.50. Last time we pumped up on silver, we just barely missed $30 an ounce. If we get a nice push going on silver, $30 an ounce sounds very reasonable to me in terms of where we could go on a price action perspective. So we'll see. Perfect candle. Yes. Hold on. Let me do it. 1 second. Perfect candle.
Perfect candle.
Yes.
Right,
Frank's not here, so we have to do the sound effects for him. Okay, so what else can we get into? Guys, please feel free to leave some charts for me that you would like in the chat, and I'll try and pull them up. The dollar yen pulling back here a little bit. It's such a hard chart for me. I'm going to stick here to what's on the edge finder because this is going to be a little bit more clarity for me. So dollar yen is getting a bearish read. So if I look at this, is this the start of a lower high? Well, again, I just said I need to see kind of a break of structure in order to confirm that. Because right now what we see is just a crazy chart of fling to the upside, a sling to the downside. So for me, there's not really anything here that I can take anything short term off of the daily chart, at least. We have broken this upward trajectory recently. So perhaps if you're bearish on dollar yen, maybe pullback plays could be interesting on a lower time frame basis. Maybe this 50% retracement. But again, I like to see just kind of a clear daily chart level. That's usually where daily in the 4-hour chart is really my sweet spot there. Let's take a look at dollar CAD, for example. Dollar CAD. So I'll pull this one up. So dollar CAD, let's take a look at the daily for a moment. Let's just start fresh on this. So dollar CAD is coming down to, this is interesting. If you're bearish on dollar CAD, now you're starting to see lower lows. But the bigger question is, can we actually close underneath this level of support? This is a multi-month level of support going back from March and perhaps even earlier. Nah, really, it's just back to March, right? Coming back down to March's key battle zone before we saw this big breakout on dollar CAD. If you're watching dollar CAD, what I'd say is watch to see if we can actually break through these lows. And if we start to see that, then perhaps I'm a seller of dollar CAD. So dollar CAD, a fair setup for me if we get a breakout. Dollar Swiss, let's take a look at USD CHF here. So dollar Swiss sitting, ooh, this is an interesting chart. So if you're a bull, you're watching this level of support with, anticipation to see if we can bounce off this level. But if you're a bear, which I would consider myself dollar bearish right now, the question is, can we break underneath? And I also want to take a moment to recognize that I am officially bearish on the dollar, not because I feel like it, but because the system is leaning that way. Pound USD bullish. I mean, look at the new setups, guys. Look at the new setups on the top setups page. Pound USD, Euro USD, gold, USD CAD bearish, USD Swiss bearish, USD yen bearish. We've completely flipped because all the economic data came in light and now inflation is showing signs of cooling. Hopefully this makes sense, but this is how the top setups page works. When I change my perspective on something, it's not because I feel like it. It's not a gut change. It's not, like I woke up today and I just wanted to sell the dollar. It's systematically, our indicators here are pointing now towards dollar bearishness. And I'm only as good as my system is, okay? I'm only as good as what my systematic approach tells me to do. If I break chains with it, what am I doing, right? I've spent all this time building a system that helps me to gauge conditions, right? Trues and falses, Boolean values, inflation statistics, PMI data, GDP numbers. I have to admit, or not even admit, I mean, I just have to acknowledge these data points are coming in pointing to dollar bearishness. I mean, look at this. Bonds are getting a +8 reading. That's very bullish for TLT, which is a position that I have on right now. Now, unfortunately for TLT, I'm not going to act like I played that perfectly. I played it really poorly. I was incredibly early to TLT. So TLT is a bond ETF, 20-year plus bond ETF. Guys, I played this horribly, okay? I got in way too early. I got filled at like over here. And I sat through and I was waiting for a bigger pullback and I didn't. I got excited and I bought too early. So I ended up, selling puts. I got assigned, and then the market kind of went sideways on me, and I held it because, I like the trade still overall. But again, my perspective is this: I was too early to the trade, and now I'm getting, not even rewarded. I'm just getting bailed out of a position that I've been stuck with on my mean reversion style of trading. I have two different strategies: a momentum-based trading strategy and a wheel strategy approach that I use options for select markets that I like to trade. So I sold calls against my position, and those calls expire in a few days, 2 days actually. TLT $92 strike price. My share, I'm about flat on my shares that I own, and then I've got a slight profit on the options calls that I sold. But let me be very clear: these are going to be negative when the market opens up, because options market is closed right now. It'll open in 10 minutes. When it opens up, my call options are going to be a lot less valuable since the market has jumped. I sold calls. So when you sell calls and the market jumps, your calls become less valuable. Overall, though, I'll be, near break even. So not an ideal trade, but not a losing trade. And I will take that. I will take a break even trade that had to deal with, instead of, at one point, I think it was a $4,000 or $5,000 drawdown. So yeah. Gold sells massive. Yeah, I think just keep the daily chart open. Daily chart still looks very clean. Now, if you're looking at the 5-minute chart, yes. Oh my gosh, gold. Oh my gosh. But keep the daily chart open, okay? Daily chart still looks healthy. And if it doesn't, if it changes, I will be out of the trade. So let me be clear. Again, I trade mostly on the 4-hour and the daily chart. I don't make my decision off the 5-minute because I think there's just a lot of noise. When you get down to the 5-minute and the 1-minute chart, I know some people love to trade those time frames, but for me, the simplicity of the 4-hour and the daily chart, especially with a busy schedule, which I know I have and a lot of you guys have as well. If you're busy, consider swing trading. It is such a nice change of pace. I've done it for many years now, but swing trading is so nice because I can just take my trades and I don't have to execute 47 times to make a profit. I can execute a couple times and make money just waiting, which is very nice. Why is my edge finder getting a 13 reading while yours is a 14? Let's see. There's the 13. It's just because I hadn't updated it. 4 hours is thumbs up. Agreed. Nick, is it possible for gold to go back to $1,000, or will it always be in an uptrend? If gold goes back to $1,000, is it possible? It's possible. But if gold goes back to $1,000, something is seriously, seriously wrong. Because why does gold go up endlessly over long periods of time? Not on an everyday perspective. Gold can go down for years. Why does it go up over long stretches of time? Because they print dollars every single day and they don't print gold. They have to mine it. So there's more dollars in the system every day relative to gold. So that's why over the long term, gold typically goes up. So if something were to change so dramatically that the price of gold were to go to $1,000, something is seriously wrong in the world. I don't think gold will ever go back to $1,000. If I'm wrong about that, then so was everyone else. So yeah. Bitcoin updated to neutral on the Edge Finder. Can you enlighten us on the fundamentals there? Yes, absolutely. So Bitcoin, inflation cooling in the Edge Finder is positive for Bitcoin. So my bearish reading that we had here just a moment ago is no longer there. So where's Bitcoin at? Bitcoin's not under indices. Let's just go Bitcoin. So Bitcoin's getting a neutral reading now because inflation data came out cool, and that's good for Bitcoin, right? Trend has now flipped also bullish in the last few days. So my Bitcoin trade might not work out. And if it doesn't, it's okay. To be honest, I've had a pretty good stretch here recently. My win streak has been most of 2024. I've been on a pretty good win streak. I hope that fingers crossed that keeps going, but I know it will end at some point. I will take losers within a win streak though. So a Bitcoin, might have been a bad call. It might turn out to be great. We'll see. But again, it is a bit of a swing trade. So if Bitcoin breaks these highs, I will take my loss. It's a small trade for me. I'll show you. IBIT is what I shorted. I'm down $160 overall. So it's a tiny trade for me. SPX500, again, 4-hour chart, did pop up. NAS 100 popped up here. Very nice. Not bad. Guys, I also want to reiterate, if you're somebody who's watched the stream for a while and did not hear the news already, we are doing currently a 45% off discount for CPI Day. If you guys have not picked up a copy and you would like to use the tools that I'm using each day in my show and in my content, let me just give you a little bit of a background story. A1 Trading is a software company out of Atlanta, Georgia. I started it in 2018 from my college bedroom. I went to school for computer science. And when I got obsessed with trading in like 2016, 2015, I have always combined the two things together. My passion for building stuff, software and things like that, and my passion for financial markets. And so over the years, I've added on staff. There's about 10 of us total that make up A1 Trading. And we have been working on this tool, which has become our flagship thing at A1, our fundamental analysis software, the Edge Finder. The Edge Finder has been in development for 2 years. We started it in 2022. And it has become a really a staple product for a lot of fundamental traders. So if you see yourself as being a fundamentalist or an aspiring fundamentalist, I want you to take advantage of this. This is a huge discount, 45% off. It's nearly half the usual price, and the price is going up to $1,500. So you're getting right now it's only $1,400 at 45% off. It's like under $800. So don't miss this. Click the link we're going to drop here in the chat for you. If you'd like to get a copy before today ends, again, this is a one-day only flash sale just for CPI. Take advantage. Send us a direct message. Just click that link. And when you do that, you'll be connected to a real person on my staff. I mentioned we have a team of 10 people total. So if you'd like to connect with someone on my team, chat about the software and see if it's the right fit for you, please take a moment to do so now before that sale ends. So again, there you go. Should be cool just to chat with you. And also, like I mentioned earlier, if you are an Edge Finder user, please join. We've just created a new Telegram channel, a private Telegram for Edge Finder users. And we would love to hear your feedback. If you're an Edge Finder user, help us to continuously improve the tool. You guys know if you have the Edge Finder Pro, you get all the future updates completely for free, but help us out. Leave us some feedback. Let us know what we can do to continuously improve the tool, both for yourself and for ourselves as well. So let's see. Alan says, it's no doubt trading is an attractive way to make money and want to partake. Things to look out for influencers, signals, etc. It's so simple. It's so simple. 95% of people you watch on social media, they will never show you a track record. There are some of us that do. It's hard to do. And I'm not trying to just pat myself on the back, but it's something that myself and a couple other of the very, serious people who love this industry have chosen to do. It is hard to log into live brokerages and to show people that. If you think for a second, imagine if you had to pull up your portfolio every single day and show people your mistakes, show people your wins, your losses, all of that. It's hard. And that's why most influencers don't do it. But you shouldn't buy anything. You should never spend a dime on somebody who won't show you, in my opinion, their trading account. Show your trading account if you owe it to your audience. I greatly respect and appreciate the platform that I have here. I have a lot of people that watch me every single day. I believe I owe it to the community to show you that I'm not full of what, that I actually do this, that I actually make money doing this, and I'm not full of it. I think that there are other influencers who do the same. There are other influencers who show their trading accounts. Somebody that I know and am friends with is Tori Trades. I'm sure many of you guys know her. She's instantly way more popular than I ever was, but she's awesome. I've chatted back with her a lot. She shows her account regularly. It's awesome. I think it's very cool. Chris Pulver, who we have on the show, shows live accounts regularly. Do not spend another dime. If you've ever spent money, I want you to be very serious with yourself. Have you ever spent money on somebody who never proved that they were profitable? Or have you spent countless hours watching somebody's videos who's never shown long-term profitability? If the answer was yes, forgive yourself for making a stupid mistake. You shouldn't waste your time on them. You don't know if they're profitable. They're making money. I'll tell you this. I make money from YouTube and from software sales. I do that every day. The reason I tell you that openly is because I do that, but I also trade and I also make money trading and I show it. And again, there are other influencers who do it, but I always get on that subject and it's something that I'm passionate about. If you love this industry and you're an influencer, you should be showing respect to your audience and showing them live accounts. Okay? Straight up, point blank, period. And that's all I'll say about the matter. Again, let's take a look at gold here. Gold, again, somebody pointed out that it was selling on the lower time frames. My perspective on this is just keep the daily chart open. As long as price holds this support level, I will stay long. If this breaks, then I'm out. So yeah. What does risk on, risk off mean? Risk off means people want to take risk off the table. Risk on means people want to put risk on the table because they see upside and opportunity and they're not afraid. Okay, last chance, guys. We're going to go ahead and close down the stream. But before I do, remember the CPI sale. We are giving 45% off on the Edge Finder. Click this link. Last call on this. If you want to get a copy of the tool before that sale ends, send us a direct message. Shoot that in there. GME incoming. What is GME incoming for? What does that mean? Do we have someone coming in? GME is coming in, but it's not coming in the right way. Down 16% here. Will it gap higher? Asks the producer. Is that it? Are we good? Let me know, Chandler or James, one of you guys. Let me know. Are we going to keep the show going, or are we anything else scheduled? We're good. Okay, guys. Again, take advantage. CPI sale, 45% off ends today. Message us using that link that we just dropped in the chat. And with that said, have a great rest of your day. Trade safe. We'll see you next time. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.